Hello, everybody, and welcome to the Plus3 Futures and Commodities show. My name is Ben Maldonado. It is Saturday, the 23rd. We are recording. And as always, I have my partner, Barrie with us. Hey, Barrie, how's it going?
Going pretty well. Going pretty well.
Yeah, you had a good week.
Week was good. Week was good. It was, it was a normal week, I thought. It was a good week.
Yeah, good trading, good two-way action.
Mm-hmm.
Had our cycle hit, got a few decisions, based on market movement. So we'll review those and talk about them.
A lot of action in Bitcoin.
Yeah, look at that.
Mm-hmm.
We got right up to that square as we had said, tried to pull back, touch the square, and then we're back at a decision point, which is, are we going to hold this square here, which is around 59.3. If we do, I mean, you gotta think we're going to blast off and head much higher.
At least that's the half square up there.
Right? At least, which is that's in the 68.4 area. If we get up to there and we can get over that, maybe these guys that were calling for 100,000 Bitcoin won't seem so crazy. On the other hand, if we fail here at the full square, if we come down and test this and get stuck below it, as you and I were talking earlier, this looks like a false break.
Mm-hmm.
So this is really key price action around this full square.
And and price only gets to those every couple of months, if that. So here we are.
Very true. Last time was late September, when we were late September, early October. We were at that full square.
Mm-hmm.
Before that, August, and up here was May. So it's an important test, and instead of predicting, we just wait and see what price does around that important level, and then based upon what it does, we know which way to go.
That's right.
Let's flip it over to you and get that big five review.
All right, let's get that done.
E-mini's back at the scene of the crime, Barrie.
And that's interesting you said that. Really, because, well, look at just how the chart is. We have on the trading day chart, we have a double top basically, and I hate double tops because they never work out.
Right.
And unless it's in midstream where you think you have a double top and you get blown out of it.
Right.
And same with double bottoms, right? They just don't work as much as we think they do.
And it's like Murphy's Law too. If you take them as support, the support fails. If you take it as resistance, the resistance fails. It just never works.
Exactly. And what works ends up working is some kind of a false break, right?
Right.
But here, it's kind of important because, I mean, at least interesting numbers for people that follow this type of stuff. So here we have, we went down 36 degrees at the square, 72.
Right.
And we rallied 36 degrees basically, right?
Yep.
And we're high to high, we're 36 days.
The timing's perfect too.
36 bars, right? So 36 by 36. And there's a lot of 36s going on in this little triangle. And that's not all as far as that goes. If you look at the calendar day chart, right?
Mm-hmm.
Not the exact high, but that little weekend break we had, but that whole zone, you can count it in. So from there, we're 45 days high to high, calendar days, right? Which is almost like 45 degrees high to high. So because of that, I'm a little cautious here about this high, and thinking this is just going to blow right through to 4,600.
Right.
So I would say we really have to watch this, mainly because of the day count, nothing else. And I think it's important enough to mention it. So we're on top of that.
It's funny you mentioned that too, Barrie. When I was doing the review on ES this weekend, I was thinking, we have some divergences with some of the stuff we look at that, if we're thinking like a criminal, maybe they don't gun it from here. Maybe they pull it hard, short term, get everybody scared, and then they gun it.
Yeah, well, however they do it, I think those time counts, nobody can move around, right? So we have
No.
45 to 45 calendar day high to high, and we have a 36 high to high, just taking the bars, and we have a 36-degree run. So I think it's important to notice, right? No matter
Agreed.
how it gets played out. And we have the potential, grand potential to do a false break number up here, which we could have done on Friday.
It's possible.
Very low key, right?
Right.
Anyway, so taking last week, we were looking for strong conditions above 44.90, and of course we got that. We broke 44.90 and straight up, so that part was okay. For next week, 45.60 area is really the resistance I'm looking at, and if these other number counts come into play, we're talking about the 45 and 36 high to high, then we might not even get there. But just in case, 45.60 is the next level, meaning, when we settle above that, I'd expect, I think 4,600 or even higher is probably in play here at some point. But for now, 45.60 is the upside resistance, and 45.90 continues to be, sort of the major support to bracket next week. You have anything to add to that?
Just at the weekly, and looking at my weekly, I noted resistance was around 45, 44. So it's all in that area that you have identified.
Yeah, it could push through there, but that 60 is kind of key to watch, I think, at this point.
And from a cycle standpoint, we did have that hit, midweek last week. Prices above that, so it looks like the cycle is for a bullish continuation, bigger picture.
Mm-hmm.
We just have to, see how this double top false break situation plays out.
Right. I would say watch the 45.60, and also watch our on Twitter we post the 4-hour updates, and that will show you early on if the which way the market's tilting.
Mm-hmm.
We have good levels there.
Right.
And to take a quick look at the weekly, just to keep things in perspective. So on the weekly, it's even better as far as thinking like a criminal.
Mm-hmm.
Meaning, is 144 was the key level to watch. We popped a little bit above it, corrected. Now we're back above it. So that's, that 44.90 area. And that's another reason why, that's a key level to watch. And if we can manage to stay above that 44.90, it'll be easy to just continue on. And that 44.90, 45 zone will probably put in a floor.
Mm-hmm.
For the time being. But just because it's above 44.90, I still don't trust it. I'd like to see a couple more days above these levels, and that 45.60 to be taken out. And the reason for that being these time counts that came in, 45 high to high, 36, and this perfect run up, 36-degree run up.
Sure.
Yeah, I have most of the stuff I have to talk about today is on the ES, so that I think that covered it fairly well.
No, it's good coverage, good review.
And moving on to the bonds, not that exciting. We talked about the week, this 157, 16 level to hold last week, and it held on a couple of 2-day tests. And we're still stuck in the middle of this half square. It's really kind of trying to figure out the direction from here. Being that, 57.16 is support. So for anything larger, I think we would have to take that out. And then it opens up the entire, downside. There's a lot of room to run below. And on the upside, I would really watch this this trend line connecting the last two highs, September, October highs. And also we have a, possible compression starting here, looking at the October lows. That's all we have to say, other than, it's really testing the support, and if it breaks through, we have room to run. So keep an eye on that. Upside, I think this trend line should really cap any upside movement. And if we break through that, then we'll have to work with that at that time.
There's also potential ABC up there that targets around 160.15 if it chooses to complete.
160, yeah. So that'll be right in
just
there.
under your level there of 160.20.
Yep. So the big battle is right at this half square, which is sort of a key level. And looking at the weekly, pretty much the same story. We're sort of trying to slip here. It's looking weak, right? I mean,
yeah.
It's 158.28, the half square of the 90 square on the weekly is not exactly holding. So,
no.
And we also broke the trend line. So it's weak, and not a lot on the weekly to hold it, other than this little bit of a floor that we put in earlier in the year. And so I think there's plenty of trading to do on the downside if it breaks, and that's a level to watch. It's 157.16. Yep, that's it for bonds. Crude, the most
star.
It's the best chart this year, man.
Yeah, really nice.
So what do we have? Yeah, I wanted to talk about the weekly first, because so crude's been doing well, as you can see, and the 52 square is fairly solid. You can see we checked back here early in the year, and the second pullback didn't even get close to it. So very strong markets, and we talked about it at the time. And now we're again, we use these squares to draw up our limits, frame our trading. So right now we're up 1.5 squares, square of 52. So that would give us, it's 52 plus 26. It's a 78. 78 in price and also 78 in time. So that's a square, 78 by 78. And 78 is important because, it's 7/8 of the square of 90. And that's a key area to watch no matter what. So because of that, we're going to talk about that. Well, we are talking about it, is that we really have to watch the square and see how this week plays out and make sure we don't get into sudden reversals here. So the exact half square is around 84.5 to 85 is the upside number here. And we're in price and time again, so we could balance and we might pause. That said, if we take that level out, then it opens up entirely, whole another leg that would open up to $100 plus crude, which is not out of realms.
Barrie, can you talk about the significance of the price action once you see like a price and time relationship like that? Like, what do you need to see in the market after something like that happens for it to be significant?
Well, if the cycle hits exactly what you'd see, is you'd see a quick reversal and we'll start heading down. So the whole phase would change and we'll start making lower highs and lower lows. If we hit a square and we sort of go sideways, majority of the time that's bullish. And then you can look at see how sideways, what's the low of the sideways, if it's holding within an eighth or so. And then when you start seeing it price making higher lows, that's of course bullish. And that breakout can often take us to a whole nother square, whole nother next sector of the square, right?
So the point is, just because you hit a square doesn't mean the decline is over or the rally is over or it's going to reverse. You have to watch the subsequent price action to get clues to what's coming next.
It's all price action. So these lines are just telling us where price is in time. And so these are places to note. I mean, we noted it, back here when we did 52 by 52, but we came from the upside. So that was support, right? If that support didn't work out, then we'd have to take a look at that. Going back to the daily, let's take a look. So the 72 seems to work pretty well for crude. And earlier when we were coming up on this 36 by 36, so here's a good case example of what we just talked about the weekly. So here we came up to 30 by 36, and we talked about that and to see if it would pause or correct. What happened? It popped right above it. And if you really look, let me zoom this in a little bit. You can see how prices, basically held above that half square zone. You see that? All the closes are above, right?
It was more of a sideways than it was any kind of
and it was not
correction.
below the square. It was above the square, right? This is more or less above the square.
Sure.
These three lows right there. So that, that's a sign of the market being bullish. Square really didn't take. So that would be a good example of that.
Sure.
And then it moves on. So on the same line of thinking, so we have a 45 by 45 here. We're coming up on Monday, Monday, Tuesday. And so the important thing for me is it's that we have the big weekly square, 78 weeks, and then we have this smaller 45, right? And when you have double squares like that on a weekly and on a daily basis, you really have to pay attention. So that's all this is. You got to pay attention. We're so bullish, but you can't ignore these things when they show up. And so it's around 84 and a half. 85 is where the half square is. So that's the level to watch. We'll update all these levels on the spreadsheet and also adding a little bit of small notes to it. And the spreadsheet link is below the description. So all the commodities that Ben talks about in my levels here, we update that by Monday and also keep it updated during the week. So for crude, I would say, this is really the level to watch. And I think if we clear this half square, I think 90 is the next level up. This 91 we've had on the chart for a while now. And earlier I was thinking, if we get through 82, we should get to 90. It's kind of an open and shut case. And it still is, except for these couple of little squares that popped up.
This 84, 85 area is key for the next sort of short-term direction here.
Right. And when we do that, then we got 90. And if we do 90, so that's enough for now. That's what we're looking for. Let's go back and cover. Let's get to gold here. Again, last week we talked about 1765 being the level to hold. And of course, price came down to that area, 1765, 6065 area, and it reversed and we rallied into Friday. Probably the most action in gold in a while, right? For a week. So we had that, and he's holding the trend line fairly well, and still bullish. Silver also looked good, and I think you're going to talk about silver
and gold,
and gold later. So it's holding the trend line and held 1765 on this little correction. Everything looks okay for the long side. I think 1832 is the next level to test. And if for all the gold bulls out there, if we can clear this 1832, that's going to open up this entire upside. So we're trapped in this bracket, and that 1832 is also these old highs that we had. And I doubt it's going to hold it for a fourth time.
Agreed.
Right. So if it goes, it's going to go this time.
That's a nice ellipse there, Barrie.
Oh, thanks, Ben. Well, they help, bracket these congestion areas, right? And,
they really do.
I don't want to cover up everything else. So
right.
Let's look at this is also inside of the ellipse. So we added these other, we kind of pulled in the bigger triangle to narrow the frame, and we're still in here. But looking at the daily, like we said, if we can get up to the upper end of this little triangle, then it's also right, that line happens to fall right around, 1832, 1831. Again, if we break that, then we're ready to go. Up until then, it's sort of backing and filling within that. So not much right now, But all of this sideways, the big triangle is not just going to go away quietly. Right?
And I was going to say a lot of energy is being built up
A
in
lot
there.
of energy, a lot of energy. And, this is, and we'll see that soon enough, but this can't continue. So, forever, I mean. So it's
That's right.
just a matter of waiting for which side to pop. And now we're close because we are making higher lows. And if we can take out this last weekly high, I think that'll open up the upside. That's really all I have for gold, keeping it simple. And that upside will be, here's that 1832 number. Interestingly, the trend line on the weekly and this level lines up. So let's see if we can do that. Move it on to the dollar. What did so 93.70, we were looking for support.
It's battling there.
It's definitely battling there, and I should probably move this line down to maybe 93.50.
Mm-hmm.
But it's good enough. I think people can figure that out.
Mm-hmm.
So I think the key for the dollar is to hold this trend line right there, the lower trend line, right?
Mm-hmm.
As long as we're holding that, I think dollar's in fairly good shape and can move higher to challenge the half square. For now, it looks okay. I think 93.50 is probably the correct level, not 93.70, but I'll leave it in there for now and add a little line like that. So I think between 93.50 and the trend line is support. If we can hold that, if we clear 93.70 next week, clearly I think then this little correction is over and we're probably going to move higher. But let's watch that, and it's in a tight bracket now. On a weekly basis, I think last week we talked about prices hitting the upper end of the channel here.
You turned it.
And yeah, and talking about that we should at least correct a little bit, and we started correcting, and 93.70 was sort of these old highs, weekly high, and it corrected it. So let's see how we move forward from here. It might correct a little bit more. Either way, I think till that trend line goes, dollar's in really good shape.
Mm-hmm.
No question about that. So there you go. We'll leave it at that.
A lot of things key off that dollar. So get the dollar right, you can get a lot of markets right.
Mm-hmm. And so far, the dollar's very strong. Look at this.
Mm-hmm.
Higher lows and higher highs and everything else. Let's take a quick look at the euro. Pretty much the other side of the story. We saw prices come down to the 72 square, and we were looking for some kind of a pullback. So we got the pullback, and the 1690 area is really the resistance that it should bounce off of, which, the old lows here and this entire consolidation, lows of the whole consolidation. There's a lot of overhead here. That's why when it broke, you see how hard that broke, right? Coming out of that. And now we're just testing those. So as long as it's below 1690, I think it's soft. And looking for 1690 to hold, at least to challenge it. And then we can take it from there. If we're going to take it out or we're going to bounce off of it. So for now, we're still in kind of correction mode. And you can see how it's starting to compress as we get close to that price.
Another nice ellipse.
Another ellipse. Well, I throw them in there when I need some clarity.
Mm-hmm. Gives you definition.
Yeah. Again, we're looking for support down here around the half square, and the ellipse is right around that same area. And I think this is the area we have to really watch. It's the underside of the main fork and this line. This is the area we're going to run into resistance on the weekly basis. And we're there, right? More or less there. And we saw on the daily, we're bumping right up against that. So if this is the normal sort of a correction, we should come up here and weaken up and start heading lower. and the inverse for the dollar. So they're all showing up perfectly so far, right?
Mm-hmm.
Anything you want to add to that?
Just it's interesting how the dollar is in a position of deciding whether it's going to hold support, and gold is in a position where it's deciding whether it can break resistance.
That's right. That's right. Very, very important to watch these things.
Yep.
And, all right. That's all I got for today.
Excellent review.
All right. Thanks.
Make sure if you like the information we're providing and if it's useful, make sure you subscribe to our YouTube channel and give us likes and comments and things like that. That helps us to know we're on track.
And we always forget to ask, so now we have to make a note to remind ourselves, right?
That's true. Yes.
Yeah, I mean, we've gotten some likes, so which is very nice. So thanks for the likes and subscribe and like, and that helps us. Well, what happens is YouTube uses that data to promote our videos. So I think that would be a nice thing for you guys to do. So thanks.
Excellent.
Thank you. Looking good.
Yeah.
Broke the triangle that you had last week.
Absolutely. Broke the triangle, broke through the full square. So the bearish lean that I had is now over. Interestingly enough, too, we held this major trend line from the March lows almost to the tick. Really nice at the lows there. Mm-hmm. We were seeing if we were going to get, this was sort of the first push, and the second push was going to pause right up here into resistance and the trend line. Instead, we broke through and we're staying on top. What I'm watching now is to see if we do get some sort of market pull next week, as you were saying, based on the squares you were seeing on the ES and the double tops and so forth. If we can hold on top of this square and hold support here, that would be really bullish, in my opinion.
Exactly.
It would give us the launching pad to go to new highs. Mm-hmm. So NQ is definitely in a much more bullish position than it was last week. And we want to watch on any pullbacks to see if it holds there or if it punches through, if we hold this trend line and can get a higher low. So we're watching that. Let's go to, we're going to do a little bit different type of review this week. We're only going to focus on the charts that are actionable and are ready to go. We try and do that each week. But this week, we're going to even narrow it down more. And if I don't mention a chart or you don't see a chart, the way to stay up and continue the story is to make sure you check the spreadsheet, because we've got comments there. We've got important levels, support and resistance. So if we don't focus on a particular chart on any weekly video, it's just because it's in a consolidation or a correction. And for example, we're going to go to the grains right now, and we're going to talk about wheat and corn, and we're not going to focus on soybeans because soybeans is still sort of consolidating. It's behind the other two in terms of its progress in hammering out its bottom and ready to move forward. So here we have wheat. Wheat is the most bullish of the grains. And as you can see, not only has the correction not been sharp, it's been sort of sideways with an upward tilt. We've got higher lows here. We've got higher highs if you're looking from here. This past week, we pushed up and we went above this full square, which is around 750. And as long as we stay above that, we're open up to new highs in the, 790 area. And, wheat is leading the way on the grains. I continue to think that when you see support, when it pulls back and holds support, as long as it holds support, it's very, very bullish going forward.
Another big triangle working itself out.
Absolutely. The main thing that turned us was when we broke this downtrend channel. Mm-hmm. Then we held this half square. We came up and tested the full square, got above it, couldn't hold it, pulled back, couldn't even get back to the half square, and now we're pushing again. So things look bullish as far as wheat goes. Next, let's take a look at corn. Corn is similar to wheat in that we've broken the downtrend line out of this triangle. We're sitting on top. It's not as strong as you can see. The correction actually was a pullback and not sort of sideways to up like wheat. But we did get this low, this spike low that was put in on September 10th. We've pulled back and made a higher low. Now we're pushing higher again. The real key here is if we can take out this high from, September 30th, October 1st area, that'll be a really solid sign that we're heading up and, going to challenge the half square here at 555 and then the full square up at around 590. So corn's a little bit behind, but still showing all the bullish signals that we like to see for markets that are ready to move. Mm-hmm. Anything else you have to add on corn?
Well, there's a ABC target that's working itself off the main low, right? And there's a Gartley set up. So we'll see how that goes. It looks like it's in the upper square as the target. So
exactly. Yeah, things are looking bullish there. Barrie talked some about the metals. We're going to review all three metals: gold, silver, and copper. Let's start off with gold. The big development this week, as far as I'm concerned, was gold was able to punch through this sort of down channel that we've been trading in since May. The gold has actually been correcting for over a year now. It's almost 15 months since August of 2020. And it looks like the signs of a turn are here. Barrie really accurately covered the levels, the important spots that we have to take out. You can see that 1832, 1833 area he was talking about is the full square. So I'm in agreement with him there that if we can punch through and stay on top of that, it opens up this full square back towards the highs of last August. So gold, I think, is very bullish. We want to watch this pullback in the correction because I do think we did complete something up there on Friday. Do we get a sideways correction? Do we get a pullback with a higher low? Can we hold this trend line in this half square? The answers to those questions will tell us, how bullish is gold going forward. But in sync with Barrie's view, I really like the price action in gold, and I think we're getting to a phase where it's going to start moving. We're going to see much higher prices. Gold's cousin is silver. Silver actually had a better week than gold. It was outperforming. We broke this major downtrend line. Silver's basically been going sideways since last August. Its correction has been, much more in time as opposed to price like gold. We broke out of this falling wedge, and we had a little battle here for 3 or 4 days on the square. You can see on the last day, they couldn't even get the low below the square, and we took off and went up and tested the half square here. Silver is bullish. Again, I think we did complete something super short term up here on Friday. So we want to watch this next pullback, see if we can hold this trend line, hold the full square, and then that would open up and set us up for attacking the full square, around 26 3/4. And then I think from there we go to the highs we saw in January, February.
Boy, that 25 really, that half square looks like the perfect balance point.
Yeah, it's really
yeah, right there.
Up here, the half square. Yeah, the half square at 25. Yeah, there's been a lot. If you look back at the correction, there's been a lot of battles and price action that happened there. So once we do this initial pullback, we want to get above that, because if we get above that, then it opens up all this up here. So silver looks good. We're going to now look at copper. Copper's been leading the metals over the last few months. You can see we had a sharp high in May, pull back low into August, September, out of the triangle, well before silver and gold did. Silver and gold did it last week. This did it a couple weeks ago. And you saw the price action. We were talking about this. Look at that move straight up to the full square. Now, it's not bearish when a full square turns it down. It should. That's what the squares are set up for. This is an area where there's going to be a reaction. We got the reaction. It's a sharp reaction, but we're watching to see, how copper acts in here, where it gives us a setup to get long because it's bullish. Breaking out of this wedge was really, really strong. The pullback has been sharp, but as long as we hold this full square and as long as we hold this trend line, the next move higher for copper would be to take out these highs here at the full square and these highs over here as well. So copper, I like. I know, Barrie, you and I were talking about copper during the week. What else do you have to add on copper?
Well, I think that low is that your quarter line. Yeah, your quarter line is key support if we're going to go higher. So I think if that low can hold, I think we can probably start up again.
Right, because we're sitting.
Yeah, everything's right there. If it doesn't, then we're probably going to go test the full square at the bottom.
And this you're identifying because of these highs here we made earlier in the year, correct?
Yeah, exactly. And I think it shows up in another square somewhere. So it's kind of important.
Yeah, so we're watching copper, watching how the rest of this pullback plays out because it does look bullish. As far as the softs are concerned, all four softs are in correction/consolidation mode. So I would refer you to the spreadsheet to check the important levels, both support and resistance there, as we work through the time, work through the corrections in those markets. We'll when they're ready to move, we'll highlight them again on the weekly show. But in the meanwhile, just check the spreadsheet. The last one I want to cover is crude oil. Barrie did an excellent review of crude, but I want to give you my perspective as well because it corroborates his from a totally different source. As Barrie told you in his review, we're at an important price and time point on multiple squares that he uses. If you look at where we closed on Friday, we closed right at my daily half square, right in this 84.14 area. So I agree with him. This is a very important point. If we get through this, which I think probabilities favor, if we can get through this, we're looking at, a test of the full square in the 88.70, 89 area. If we don't, what I want to watch is, do we do this kind of sideways movement, up and down, not going anywhere? Or do we correct sharply? If we don't correct sharply, I think, as we discussed, the square is more of a pause than a stop sign. It's more of a yield. Just wait, look both ways, because then we're going to start going again. The other things I really liked when I saw the price action here is, we talked about this before, these 3 days, look at the lows right on that full square. They couldn't push below that. So the full square is an important level that if we do pull back, I want to see that hold. Also, look at the sharp correction off of that square there, right to the half square. I mean, it's doing everything a market needs to do to be bullish. We just want to, look both ways here, make sure everything's clear, get above this price and stay on top of this half square so that we know that this run can continue at this time. The other energy stock we follow, or energy market we follow, is natural gas. I'm not going to do a full review of natural gas because I think it's still sort of in correction consolidation mode. Still very bullish, like we talked about on the monthlies a couple of weeks ago. If you need to see the levels, check the spreadsheet. But I think we are in the energy space. We are in a sweet spot. I did an interview with Dale on Friday on the Forex Analytics group, and I showed him fundamentally why these energy markets are really set for higher prices. And I do believe in the big picture that that's something we got to keep in mind. We try and be a little more tactical here with these, a little shorter term. So keep an eye on the natural gas levels. Watch that level on crude, and then let's have a good week. Anything else you got to add, Barrie?
I think we covered our bases. We're good.
Okay. Have a good week, everybody, and we'll talk to you next week.
All right. Thanks, Ben.
All right. Bye.